exchange and is commonly used to refer to the foreign exchange market, the largest financial market in the world. Picture a massive marketplace trading across all the corners of the globe. But rather than having goods on sale, this market trades in global currencies. The Forex market, or foreign exchange market, is one of the most widely traded markets in the world, with daily trading volume of over $6 trillion. Unlike the stock market, the Forex market is open 24 hours a day, from 5 p.m. Sunday to 5 p.m. Friday, Eastern Time. So you might be wondering, where exactly is the Forex market based? Well, it's actually everywhere. Forex is a decentralized market with no single central authority or exchange that governs it all. Instead, it is made up of a network of banks, brokers, dealers, and even governments who trade currency with each other. Also, make sure to hit the like button, as it allows for our team to continue to produce. Each currency is represented by a 3-letter code called an ISO code. Here are some of the main currencies traded. USD is the US dollar, also known as simply the dollar. AUD is the Australian dollar, also known as the Aussie. NZD is the New Zealand dollar, also known as the Kiwi. EUR is the euro. CAD is the Canadian dollar, also known as the CAD. GBP is the British pound, also known as simply the pound. JPY is the Japanese yen, also known as simply the yen. CHF is the Swiss franc, also known as. Currencies are traded in pairs, because when you trade Forex, you are buying one currency while selling another at the same time. Let's look at the pound-dollar currency pair, for example. The first currency in a pair is the base currency, and the second currency is the quote currency. Let's say you get a quote of pound-dollar as 1.2655. This means for every 1 pound, you get 1.2655 of US dollars. There is always an invisible one beside the base currency on the left. So here's what happens when you actually trade currency pairs. When you buy a currency pair like the pound dollar, or when you go long on the pound dollar, you're expecting the pound to appreciate while the dollar depreciates. When you sell a currency pair like the pound dollar, or when you go short on the pound dollar, you're expecting the pound to depreciate while the dollar appreciates. And of Forex, exchange rate changes are measured in pips. A pip stands for a percentage in point or a price interest point. This is a standardized measurement for the smallest whole unit price move that an exchange rate can make. If the Australian dollar is sitting at 0.6751 and its value gained by 1 pip, it would move to 0.6752. Most currencies are written to the 4th decimal place, with the 4th decimal place representing 1 pip. However, some exceptions buck this trend, such as with the yen-crossed pairs. The Japanese yen is often quoted to 2 decimal places. So a 1 pip gain would be 146.22, rising to 146.23. There's also a pipette, which is a fractional pip that is 1/10 of a pip and is represented by the 5th decimal place, measured in lot sizes. A standard lot represents 100,000 units of the base currency. A mini lot is 1/10 the size of a standard lot and represents 10,000 units of the base currency. A micro lot is 1,000 units of the base currency. And a nano lot is 100 units of the base currency. Has a bid and an ask price. These 2 prices form the basis for trading on the Forex market. When you're looking to buy an asset on the Forex market, you will pay the ask price for the base currency. When you're looking to sell an asset on the Forex market, you will sell at the bid price. The difference between the bid and ask price is called the spread. In essence, the bid-ask spread is the difference between the price a dealer will buy a currency and what they will sell it for. The spread covers the dealer's profit and the cost of the transaction. It is essentially the cost you pay to enter the market. It's important to note that different brokers can offer different spreads, or they may offer variable spreads that can change based on market conditions.